Monday, January 15th, 2018, Monaco 64, home of alternative economics and contrarian views. So it's 8:45 a.m. London. I'm going to look at the markets and I'm going to look at the Dow and the melt up that we're seeing in the Dow and what it could mean. And to look at the dollar as well, because we're seeing kind of a meltdown in the dollar. So let's see where we are. Gold and silver have done well overnight. They've continued higher. We've made a new high overnight at 1345 in spot gold. Right now we're at 1341.20, up 3.5 or a quarter of a percent. Spot silver is 1734, up 10 cents or 2/3 of a percent. The high's been 1744. The Dow Jones Industrial Average futures is up 102 points at 25,900. We've been as high as 25,950, so up almost 150 points there. S&P is underperforming a little bit, up only about 5 points, 2790, up 0.17%. And the NASDAQ is up 0.2 of a percent at 67.68. The dollar is continuing to move lower, kind of a mini meltdown, unlike the melt up in the Dow. So dollar index is at 90.77. On Friday, we closed at spot 90, which was below the low from September last year at 91.01. So we've broken very key technical levels here. It will be interesting to see if it rebounds a little bit, a bit of a correction, but dollar's still under pressure. So I won't touch up on the currencies, except to say that the dollar is down about almost, about 1/3 of a percent against the yen, which should help gold further. The crude oil is 64.20, the front month WTI, virtually unchanged. So what about this Dow melt up? Well, I've looked at a chart. It's a quarterly chart of the Dow on bar chart, and it's on a logarithmic scale, and it's going back to 1920. And I've drawn this trend line that comes from the high in 1929 at 386.10. and the high in 2000 at 11,750 in the Dow. That was the dot-com bubble high in the Dow in 2000. And so I've drawn that line, that trend line, and you can see we're getting pretty close to that trend line now. You can see the long-term chart. Now I'll move to the shorter-term chart. And bar chart doesn't really give me, if I click on the cursor, it doesn't give me where the line is, but I have to estimate. But that line right now, as it's a quarterly chart, it comes in just below 28,000. So am I saying we're going to 28,000 this quarter? Could be. Or we could continue to move along and not go up as quickly, and then by the middle of the year we could even be higher. We could be at almost 29,000 on that trend line. But yeah, definitely this could be a target here, 28,000. And if we break above that, let's say we go above 30,000 or higher in the next few months, that could be the melt up of all melt ups, because we'd break this trend line going back, wow, almost 100 years. And does that mean that the U.S. economy is doing really well? That U.S. corporations deserve this valuation? Maybe, but I still think the verdict is still out. The U.S. is accumulating a lot of debt still. Tax reform is not going to improve that. The rest of the world is drowning in debt as well. Central banks have printed trillions upon trillions in the last 10 years, and they have no way to get out of their balance sheets, even though they say they're going to get out. I think it's going to be a lot harder. And why is that? Well, because by getting out, that means they're selling, getting rid of bonds, and that's going to raise interest rates. Government bond interest rates will raise if they get out. Even if they sell, there won't be as many buyers. They've artificially kept up the bond markets through their QE. And higher interest rates are going to change all the valuations and things are going to come down. So if they don't want that to happen, they might start printing again. And we can see a continued melt up in the markets. So I just wanted to show you a couple of things here. The first one is an article from 2013. It says, "Sorry, Russell 2000, the Caracas stock market shows how it's done." And you can see there, it says, "The corks are popping, new valuation metrics are confirming the buy signals, and everyone's a stock picking genius." This is the image projected by CNBC USA as the Russell 2000 is now up 30.6% year to date. However, we can only imagine the elation, exuberance, and ecstasy that would be seen day in, day out at CNBC Venezuela as the Caracas Stock Exchange index rises its most in a month to a new all-time record high and is now up 312.5% year to date. I don't really know what their currency was doing at the time, but we know that Venezuela now, a few years later, is a basket case. People are killing cows in the street to get food. The situation there is dire. I'm sure the wealthy people there have done okay because they have dollars or gold or assets that have kept their value. But the general population is really, the society there is collapsing. It's one of the biggest oil producers in the world, but it looks like their production is halting because of the infrastructure has collapsed. So that's Caracas there in 2013. And then I want to bring up another chart. And this is a bit, this is almost 100 years old, and the famous Weimar hyperinflation. So that's the German stock market in marks and US dollars. The marks is the black line, and the figures are on the left. You can see it did really well. It went up to 100 billion. But in real terms versus gold, because back then the dollar was gold, it did well as well, actually, because it went from around 20 in 1920 and was back around 27 after the hyperinflation. So actually, the stock market did help people maintain their purchasing power, but the nominal amount in German marks was just how can I say, it was just fiction in value terms, in real terms of gold or the US dollar as it was at the time. So I thought that was interesting to look at. Looks like the Dow, S&P, these markets are going to keep going up. It looks like the dollar is in dire situation right now, dropping through key support there at 91 in the dollar index. And gold and silver should continue to go up. Is this real? I think it's not as bad as Weimar Germany right now, but it's somewhere in between. It's not real value, what we're seeing in the Dow. We're going to have to see some kind of readjustment with the real world. I think this Dow, even if it goes above 30, it's not real. The only thing that could stop this is for the central bankers, especially the Fed, to admit that they've been too loose and to raise rates in an emergency meeting. Let's say if the Dow were to break 28,000 in the next few weeks. Just like they used to do. They've done emergency meetings in the past when things were the other way around and the markets were crashing, like Greenspan did in '87. He came in and flooded the market with money. Right now, the market is saying there's too much money, and the central bankers, even though the Fed is raising rates and talking about reining in their balance sheet, it's not enough. And also, that goes for all the other central bankers as well. ECB, Bank of Japan, SNB, Swiss National Bank, Bank of England. So that's where we are right now. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. And you can also follow me on steemit.com and on Twitter. And I'll talk to you later.